Welcome to another episode of the Hires Podcast.
What Gaia wants to do is allow anybody to invest into AI-related yield and AI-related assets. So you can now invest into gold or any equity stock, but there's no way you invest into AI. Or you can only buy like some of the equities and stock on the market, which you captures some part up in the stack. But there's no way you can invest into the most important asset in the AI industry, which is the GPU. What we do is we allow anybody to get access to the GPU and the AI yield.
GMGM, welcome to the Hires Podcast. I'm Jake Lewis, and it's my job to break down projects and interview founders building an Iris ecosystem. Today, I had the pleasure of sitting down with Coney Kwong, the founder and CEO of Gaib. Gaib is a project focused on building a new financial primitive, creating liquidity and tradable assets out of GPUs. In this conversation, we discuss Coney's journey from TradFi to crypto, challenges and innovations within the GPU financing landscape, and Gaib's mission to democratize access to AI-related assets. You can learn more about Gaib at gaib.ai, and as always, you can read up on Iris at iris.xyz. Enjoy. Welcome to the show. Really excited to have you today. So where I want to start off is around your background. You've worn a lot of different hats, namely private equity, 3D printing founder, lead venture investor, and mentor. What's the thread that connects these experiences and ultimately led you to the idea of financializing GPUs with Gaib?
It's been a long journey, but thanks for having me. It's really a pleasure to be here. So as you mentioned, I used to be in the investment side, and then now I changed to the other side and has become a builder myself. Definitely it's not an easy journey. There's a lot of things to learn, a lot of things to pick up, and you have to be super hands-on. I study like finance and economics in uni, PhD dropout from the university. So afterwards, I went to doing traditional finance on the credit research, equity research, and private equity side. So most of my trainings were in traditional finance. And afterwards, I went to help an asset manager with a few things, including SPAC, hedge fund, VCP investments, private equity, etc. It was at that time that I got super interested into crypto. So I joined an exchange at the strategic M&A team, helped them with China expansion, looking at the exchanges, they are on exchanges, wallet companies, esports, gaming, all sorts of things. As long as there are strategic values, then we'll look into it. Either we can open up new markets, open up new geography, open up new types of users and more traffic on off-them channels. Those will be my focus. And afterwards, I helped start a crypto VC fund, doing investment on the infrastructure side in crypto, where we focus on a lot of these like layer 1A tools, restaking protocols, cross-chain, interoperability, etc. So all the time, my focus was in either on the investment side or the finance perspective. But at the same time, I'm also an engineer by training. Like I know coding myself. I've been paying really close attention to the AI revolution because it just intrigues me. So after ChatGPT 3 and 3.5 launched, I was building my own AI training bots, AI agents. At that time, you have to do a lot of things, optimization yourself. The context window is not long enough. You have to build up the memory. You have to use effective databases searches to optimize the response that you can get from a long conversation, and also have to optimize the models you'll be using and training and even fine tuning for. But the market started to converge at around late 2023, where in the blockchain ecosystem is talking about, hey, what we can do with crypto and AI here. So it was at that time I started to study more about the market because these tools are the most interesting sectors I'm very interested in. So I was looking at like the different AI companies doing decentralized data, model, compute, marketplaces, and also some of the AI applications. And then realized that it's quite interesting. There's nobody actually focusing anything on the finance perspective. And it somehow like intrigues me because I have a pretty strong finance background here. To me, every asset class got to have a company that serves them on the finance side. For instance, if you go look at the car industry, you have car leasing. You look at airline industry, you have aircraft leasing. And even for GE, you have GE Capital for it. And to me, like the most important thing that blockchain is bringing to anything is definitely opening up new markets and opening up new assets. That's what DeFi was known for in 2019, 2020. So I was thinking, can we do something here to build like finance company to service the most important subsegment under the AI supply chain, which is the AI infrastructure. Like these GPU companies, neo clouds, hyperscalers, data centers, where they empower the whole AI stack. No matter what you build on top, you need computation power. And to empower the computation power, you have the computation assets. But right now, for us to invest into them, there's no way. We have no channel to invest into the underlying assets except by buying NVIDIA stock. So that's where I was thinking, can we do something here? Breaking down markets, breaking down barriers, getting people access to these new asset class, which we don't have like any ways to, that would be quite interesting. So that's why, given my background, I was thinking, hey, maybe we can leverage crypto here, all the DeFi, Lego DeFi pieces to do something on the asset class. For example, how about we can tokenize these assets, make it investable assets on chain. And then on top, can we build a DeFi economy to allow them to be traded, to allow liquidity to be built up there? So it happened the same way to all the other commodities, to gold, oil, even orange. They have this whole market for trading it. But in the AI sector, we don't even have a market for GPUs, like these most important assets here. So how come? So that's why last year around Q1, I shared the idea with my co-founder, who has more like AI and semiconductor background. So his family runs the top 7 global chip maker these days, which makes like most of the Bluetooth chips, Samsung controller, and the other microchips. And then he himself has a cloud company. So I was asking him the question, hey, do you think there's a need for a finance company that help you guys to grow under this market? And he was, dude, I've been thinking about this for a long time. Let's do this together. So it was Q1 last year where we started brainstorm, fine-tune the product architecture. And around mid-year, we started to officially launch and come out to do the project. And the third guy on the team, like third co-founder, he has a strong background in cryptography and DeFi. So that's where we joined force together to make this happen. So yeah, it's a long story, but how you chain up is getting the finance background. The thing I like about blockchain is it brings up a new market and new assets, and then we want to use that to open up these asset class, which is GPU, for people to invest into.
Yeah, it makes a ton of sense. I mean, it took a lot of nuance and time to really get to that point, but it's really a first principle solve. And I think it's very clean. It's a pretty massive market. I'm very excited to see what comes of it. And speaking of Gai, the name itself seems to have a lot of lore. It has an Arabic background, basically translating to the unknown, the unseen, or the future. It also has ties to the Dune series, namely through
Yeah.
Lisan al Gaib, the prophet for the Fremen people. I'd love to hear your thoughts around the significance of the name and maybe how you ended up discovering and deciding on it.
Yeah. So we're a very big fan of Dune. And it just makes sense, right? So if you look at the Dune movie, the most important asset in Dune is spice, right? And the whole universe, the Dune universe. And then the most important asset in the AI era is compute and computation assets. So they just tie it up together. And also 3 things we want to do: GPU, AI, and blockchain, where we connect them all together. Where blockchain is like the tokenization, financialization, all these finance elements there. And GPU and AI basically means like this is the sector that we focus on, the asset that we focus on. So yeah, so that's where the name comes from. And of course, we want to tie to Dune because there was a meme out there meaning that Taiwan is Arrakis. People want to conquer it and things like it. So that's kind of like a funny meme, but it doesn't change one thing is we believe that compute assets will be the future of like future currency. People want to buy it, people want to use it. So we want to give people the access to do this.
Yeah, wow. There was obviously a lot of thought that went into the naming, and I love the acronym as well. That also underpins a lot of that. I had no idea. So let's take a step back and let's talk about exactly what Gaib is. We've alluded to it. You've spoken to it to a degree directly, but I'd love to hear how you describe Gaib to someone who's never heard of the project.
It's very simple. What Gai wants to do is allow anybody to invest into AI related yield and AI related assets. So you can now invest into, let's say, gold or any futures, any equity stock, but there's no way you invest into AI, right? You can only buy like some of the equities and stock on the market, which you capture some part up in the stack. But there's no way you can invest into asset itself, the most important asset in the AI industry, which is the GPU. So what we do is we allow anybody to get access to the GPU and the AI yield, basically that.
Very simple, very clean. Let's talk the supply side. So the data center operators who actually own the H100 or H200 clusters. What bottlenecks do they typically face with conventional debt or equity? And how does Guy restructure these deals on chain?
Yeah. So one thing I want to mention about that is you're talking about the AI supply chain. So that's and the AI supply chain in terms of the utility side, you have people who want to use these GPUs, and then the other side is the one who's supplying them. These are the data centers and cloud companies, and it captures most of the values under the current AI supply chain, right? In terms of how much money they make. Whenever you use ChatGPT or you use Gemini, any of the AI models out there, you're paying these cloud companies money. And for them to grow to meet the demands, it actually requires a lot of capital because they require a lot of like GPU assets out there. And the traditional way for them to get capital are usually three ways. One is their own revenue or profit. The second is to raise money through equity financing from VC, from private equity firms. And the third way is to use doing like private lending, like debt, loans, asset lending, or private credit firms there. But most of the companies out there are finding it really hard to get capital for debt financing, debt related, even traditional like banking. Okay. One of the reasons is after 2008 financial crisis, banks got super cautious and conservative regarding the new asset types that come up. And they don't really understand what GPUs are and let alone like talking about the GPU economy, unit economics, how neoclouds make money. They have no ideas. So they're slow to adapt and get given capital to the ones who need it. That's why most of the new regional urban rising new cloud are finding it super hard to get capital. They often resort to very expensive equity financing, like raising money from VCs. And that's where we want to come in, to step in, is that we want to become an additional channel to provide financing sources for these new clouds or new types of cloud companies. Because number one, we are in the industry. So my co-founder is an operator of a cloud company. We understand how cloud company works, what is the margin, what's depreciation of the asset, and whether they actually have clients or have the GPUs that they claim for. We can easily do the DD. And we can even know like what's the latest pricing because of the market sentiment and market demand there. So how much these GPU make, what is the payback period with all the data we want. So it's way easier for us to, number one, do the due diligence. Second thing is to the risk control, who we should give the money to. And the third thing is because we understand the market, it's easier for us to underwrite the deals regarding the other cloud companies. So our process to give them money can be relatively fast. Doesn't mean we don't adhere to the strictest like principle of controlling risk, doing the DD, but because we understand the market, it's easiest for us to underwrite and also get the deals to the people. And also the third thing is for most of the companies who want to get into this space, it's actually not that easy. As I mentioned earlier, we have quite a high entry barrier. This barrier doesn't limit to capital, but also limit to the knowledge about the industry. Like who are the up and rising new clouds, how much capital they need, what is the payback period, like all these you have to have a pretty strong understanding. And usually for these like AI cloud computing and data centers, they require a big amount of capital. For example, 1,000 H100 and H200s can easily cost like $30 million to $40 million. So there's no way a simple family office or a small family office can do the whole financing deal with them. You need somebody in between to help it. But the traditional finance route, banks, private credits are pretty slow to adapt. So as I mentioned, there's a couple legacy problems there. So that's why we can be the one bridging it. If there are capital that wants to invest into this, we can be the one like doing all the sourcing, checking, and then getting capital from different routes, from Web2, Web3, and all the institutions in order to make the capital for the cloud company when they need it in order to make their growth and to keep on generating revenue and to keep on generating the momentum there.
Sure. And I'm curious, would you mind walking us through a typical GPU financing deal? How is the loan structured? How are the cash flows maybe ring fenced? What exactly gets wrapped into the ERC-20 that investors see?
Yeah, tokenization is actually not like, it's actually not so straightforward as people think. A lot of people will ask the question is, A, GPU is an asset, right? They're going to depreciate. Like how are you going to tokenize it? It's not like one GPU worth $100, then you put $100 worth of GPU onto, like you mean $100 worth of ERC-20 token on chain, then done. It's not that simple. You have to understand how much like these GPUs they make in a year, 2 years, 3 years, in order to like structure the ERC-20 tokens. You have to care about the cash flow. And the second thing is these cash flow are net cash flow, like how much yield they can generate. And the second thing is you have to, when you do the loan underwriting, you only give the money to the cloud company. You have to access how much the GPUs are worth, what vintage they are in, what is the wearing situation, and whether the capital structure wise, did they have the other financing that they have already got, like who gave them equity money, who gave them money to buy the machine upfront, what the capital structure is like, and whether they use leverage. And also, we also have to check their users, like who are the one buying the GPU, paying the cash flow. Do they pay it on time? Do they have a strong payment record? Would they default? So all of that, you have to do a full DD to understand the risk regarding these assets. And then you can determine, oh, there's $100 worth of GPU asset there. How do we apply the overcollateralization ratio? Is it like 150%, 200%? So you have to determine that comparing with the risk in order to fully protect the asset when we put on chain. Just give you an example. If we have $100 worth of GPU, like most of the time when we do it, the loan to value ratio is less than 70%, meaning we can only get $60 to $70 of financing to these company when they need that because we want to offer the collateralization. And second thing is we usually require this asset to have sold out, meaning that there are people using them, paying them cash flow. And for the duration for the financing that we give to the cloud company will be less than the contract time, meaning as long as we give them the money within this amount of time, we can make sure that how much cash flow we generate, such that we have two lines of collection. One line is there's actually people paying money, the cash flow. Second line is if nobody pays, there's still the asset value there. So the overall risk has been substantially reduced compared to any other asset out there, which might not be generating yield, which may not have a plan, and the value will go depreciate way faster. So yeah, that's what we do. So we have to understand how much they're worth, determine the LTV, and then structure the financing, how much money we give them, how long we give them, what is the interest rate we ask for, or how much revenue share, the cut that we ask for. And then we wrap that into a ERC20 token on chain. So now people can buy the ownership of the underlying GPUs cash flow there. So that's the thing we do.
Yeah, there's obviously a deep amount of diligence and expertise that goes into the process. It becomes incredibly clear as you speak through it. And as you're deeply aware at this point, I'm sure, capital allocators can be skeptical. So what have been the toughest questions they've raised, and how do you tend to answer them?
I think one question that people are asked is, GPUs are growing into the newer generation being released every year. How can you solve the problems about like old asset being deprecated, the value goes down, the depreciation of that? So, I mean, it's pretty normal that people have this question if they talk about these asset class, right? But then if you truly understand what we do, then you obviously know that these are not major problems because we're looking at, as I mentioned earlier, we're looking at the cash flow of these GPUs, meaning if the cash flow is worth $100, like at the end of the time frame duration, we get $100 back. No, and the asset value there is only to give us protection, meaning you are putting down, for example, if you do a mortgage, right? So if you have a house, you get a mortgage. What you essentially giving the bank is the whole asset value of the house, and then you keep on like borrowing money from the bank, you're paying them on a monthly basis, on an amortized loan basis. So the value of the house there is essentially to give you a backing, like helping you to defend in case you get default. So the same case that can happen to us is these GPUs, the asset value out there, like depreciation definitely has some effect to it on the asset value. But if you are pretty like understand the market, you will understand what is the usual depreciation schedule for these assets in the market. There's a market standard for how people do depreciation. It's adopted by CoreWeave, Lambda, all these big cloud companies out there. So it's pretty predictable, first thing. The second thing is when you actually understand what we're doing is talking about the cash flow, then you will see that as long as the cash flow can cover up whatever money that you put upfront, then you're fine. Like you don't have to resort to bringing back the asset, liquidate it, sell it out to recover your money. That's in the worst case. So when we explain like how we structure the deal, how we do the financing, people start to realize, oh, it's actually not that simple. Depreciation is only one factor that you have to keep in mind. There are more things you need to think about. Who the clients are, how much money they make, what is the GPU, where they're based in, like there are more they should be cared about. And regarding the risk, like there's definitely people who ask, who are you giving money to? So we also go through the whole like framework of how we do the deals with them. Like as I mentioned earlier, we have to make sure that they have the asset, they have the cash flow, the contract, It's not like purely doing nothing there, not generating money. So in this case, we don't do any deals with these companies at all. So yeah, I mean, it is a new, like, it's an education process. These as a class is new. There will definitely gonna be a lot of doubts around this. Like, oh, would there be like the concern about newer type of GPU? Well, one thing people don't know is usually for like big cloud companies, how they work is they will secure a long-term contract regarding the GPUs from 6 months to 36 months to even 5 years. So the cash flow tied into that series of GPU, that batch of GPU, is actually pretty predictable. Meaning when new types of GPUs comes out, let's say now we have GPU 300, they're gonna come in a year or two. The old GPUs are still being used for generating cash flow, generating money, generating revenue. So the depreciation, it doesn't really make a big impact when the new like GPUs comes out for the old contracts there. So that's like a misconception. People think, oh, old GPUs are going away, they're not functioning well. And even now, if you look at some of the AI companies, they're still using H100 when H200 are widely available in the market, either for like low computation demand models, or like cost effectiveness consideration there. So yeah, so there's a lot of like, I would say, misconception that we have to clarify and educate about investors on investing into this as a class. But I think when the market continues to grow, when people will slowly realize that GPUs as an asset class can exist, then it will become naturally no more questions. There's the same thing. Like when we started last year talking about tokenizing GPUs, people all thought that, or all thought that we are another Ether render a cache network out there. So we have to tell them no, like we're not. We're actually focusing on the asset level. The other projects focus on the utility level. So we're completely different. We're one of the first in the market to talk about this. That's why it's a long education process. People will soon realize compute asset is actually the new oil, and the compute asset, these are the most important asset like going forward.
Yeah, that's very clear. And speaking of the tokenization component, let's talk a little bit about the demand side. You have the aid token as the base token. You have S8 or staked aid as the yield bearing token. Then there's principal and yield tokens that split that even further. So do you mind first defining what these various tokens are and how they work?
Just to give a little bit background to the audience, so we did like the like tokenized GPU tokens, which is ERC20, like the first pilot program we did 2 months ago. And what we're launching is called AI dollar. It's the first synthetic AI dollar that functions more like an index fund, or more like a portfolio of all the tokenized GPU deals. So how it works is, well, it's more like a la carte. Sorry, it's more like a set menu. So you put in $100 into the DeFi vault, and then you get like, let's say $100 worth of AID back. And what we're gonna do is gonna help you allocate the $100 into different types of tokenized GPU deals. Maybe $20 in deal one, $20 in deal two, $30 in deal three, and part of that will go to T-bills. So essentially what you get underneath is a portfolio, a basket of different tokenized GPU deals. So you don't have to care about all the nitty-gritty things about, oh, what is deal one, who they are. We're gonna abstract all that away for you. What you get is a blended yield portfolio of the tokenizing GPU deals. They can be in fixed rate, fixed duration loan model. They can be the revenue share model that I mentioned earlier. And yeah, so we're going to abstract all that away. It's just like a set menu. You buy the set menu. And then in stage two, we're going to open up for like building, customizing your own portfolio. For example, if you say, hey, I only want exposure in Asia, I only want exposure in the US, then you can customize the portfolio mix of the tokenizing GPU deals in the US for yourself. So that's going to be in stage two. And you mentioned about a few tokens like AID, staked SAID, and then the PT and YT tokens. So AID itself is not yield bearing. It's just like a token. And then staked SAID is yield bearing. So you have to stake it to get whatever these underneath portfolios, the yield they generate. And the PT tokens are further abstracted away because some people want to hedge against the yield. They want to speculate or trade or even do looping. We allow that to happen. So these are more like derivatives products being built on top of stake AID tokens there. So yeah, these are the differences between the tokens on our platform.
And when you think about other real world assets that exist on chain, you already have tokenized T-bills, you have real estate notes. Where do GPU backed assets sit on that yield, that risk yield spectrum?
It's actually very simple. So if you, a lot of these current TVL on-chain, they're all focusing on T-bills, right? It's the lowest risk T-bills access there. We have a couple like leading protocols doing this already. And what they can provide you is essentially like risk-free T-bill deals around 3 to 4% these days. If the rate cuts start to come like way more aggressively, then that might go down to 2% or even 0%. Let's say when we got a zero interest rate back then, a few years ago. So what the tokenized GPU deals that we're offering, number one, the asset back. So definitely the counterparty risk for these assets way higher than the US government, because US government is risk-free. We're technically risk-free there. The default risk for the US government is pretty low. And for these tokenized GPU deals, they're more like asset back. So you have an asset behind, over collateralized, and you have like cash flow backing it. So the risk level is also relatively low compared to pure credit lending. For example, we use our own credibility to borrow money from credit card. So that's called credit lending. We don't propose any collaterals. We pay the money back afterwards. But here for these tokenized GPU deals, they have collaterals, they have asset underneath, and like over collateralization actually applies to it. So the risk for this is lower than pure credit lending, as I mentioned earlier. And they sit in between the T-bills and pure credit lending, more like an asset-backed version. That's why the yield that they can offer is, we're talking about like 10 to 20% for these asset lending. For pure credit, you can sometimes pay up as high as like 30%. Sometimes you have to pay 20, 30%, even 40%, depends on your own credibility there. And so that's like where they sit in. And also comparing to the other RWAs, we're seeing more and more RWAs on the private credit fund side. So it's a big word about public credit or public equity. So there are a lot of nitty-gritties between them. Like you can have REITs, you can have mortgage, you can have equipment financing, you can have even like factory financing, effective financing, and credit lending, and even like a lot of different types of offerings. So I would say asset back, like using GPUs over collateralized, is relatively low risk among the whole spectrum there inside this big category of like private credit sector.
Sure. It seems like it's a very attractive risk return profile. But, taking a step back, thinking about the overarching DeFi ecosystem, which integrations, whether it's AMMs, lending markets, derivative venues, are most critical to making aid function as, kind of a true base currency rather than just another yield token?
Yeah. We definitely when we go to a chain, we want to be as deeply integrated with the chain's DeFi ecosystem as possible. Because we understand that if the asset itself is not liquid, it's useless. Like if you have a gold paper, it's not tradable, no markets no recognize it, you can't use it for exchange for any other things. So it's basically a useless paper. We don't want that to happen. That's why whenever we go to a chain, we'll be talking to every like major DeFi protocols, money markets for lending and borrowing to get the ID as the recognized asset there. And then for like structured products like Pando or Pando equivalent, these are more U protocols in that specific chain for people to get the structured products or do speculation they want. And also there are some thoughts or U aggregation protocols. We also talk to them, including like AID as one of the portfolio underneath that. And also we aim to talk to major companies on that chain that would adopt like AID as a base currency, either for payment or either for holding it. So we want it to be venturing to as many distribution channels as possible. So it's not only as you mentioned, a U token being traded only. We want them to be actually used by all the different DeFi protocols on the specific chain.
You recently launched the Spice Alpha program. It's a nice nod to the commodity on Arrakis, as you mentioned a bit earlier. Currently, it's on Ethereum and will ultimately expand to 6 chains. I'm curious, first of all, what is the Spice Alpha program?
Yep. The SPICE is called AID Alpha. The SPICE is a Harvest program. So it's an internet program they're running, a pre-deposit program. So we want to like let people to early deposit into AID Alpha and get ready when AID mainnet goes live. You can like swap the AID Alpha one-to-one to the mainnet AID tokens. So we're opening up to early supporters to educate them about what we are doing, like what AID is. Because if you don't have anything, you don't have a product, like it's hard to tell people, hey, what is AID? what is a tokenized GPUs. It's pretty abstract. Right now, if you hold like AID, you understand like the generating points, which will convert to like future potential airdrops and also future yield that being paid in the airdrop there as well. So that is like the pre-deposit campaign that we're running for. And we're going on multiple chains. So right now it's only on Ethereum, taking USDC and USDT as like deposit assets. We'll be going to multiple chains, supporting multiple other stable coins going forward, which we'll be announcing more details later.
Excited to hear the announcement there. What is this experiment so far? I know it's early stages, but what has it taught you about user behavior?
It actually surprised me because we opened the first cap last Monday, and it got filled in less than an hour, $5 million worth of the cap there. And then we launched the second cap like yesterday. So it got filled like within 2 hours for the 15 million cap. Well, I was pretty surprised and shocked that like the feedback from the community is that strong because as I mentioned earlier, what we're doing is actually pretty atypical compared to all these other USS or RWA assets or AI assets out there. People all talk about data ownership, model ownership, or some of the AI application, meme con AI agents there. What we're doing is actual AI yield asset being used in the real life, making actual cash flow. And people might not even know like what's GPU. You have to educate them, tell them, hey, GPU are essentially the engine for giving you the power you need. Like it's equivalent to the heart of the body, where they give you like the compute power, which is heart pumping the blood to your brain to power all these like AI models there. So you have to educate the market. And surprisingly, in the last two cap launches, we see quite positive like feedback from the community. Say they want to get into it, they want to get into real yield, they want to be early and invest into these assets. So we're surprised, but at the same time we're encouraged. So we'll be like doing more things, getting these AID pre-deposit and actual AID to as many chains as possible, such that anybody who want to invest into these assets, they can have an easier channel to do so.
Sure. I mean, you should be very, very encouraged by that. The initial outpouring of demand has to be incredible. It's very validating for what you're building. So very excited to hear that. And you mentioned multi-chain. I understand that you're integrating, or you're planning to integrate with Plume, Zero G, Near, OpenLedger, and Story Protocol, to name a few. What went into the process of selecting these chains to work with?
Well, it's a pretty hard question to answer. But at the same time, I will tell you what we look at, right? So when we go to a chain, we definitely care about number one, the chain's positioning. What is the chain used for? Because we don't build our own chain. We believe in the assets should live on as many chains as possible as an asset. It should be, being distributed to the hands who can buy it easily. So when we go to a chain, we have to understand what is the chain's positioning for? Who is the target audience? Would that be like opening up new markets for us, like similar to when I was doing M&A, when we decide who to like merge or invest into, there's always an answer, which is can they opening up new market? Can they allow us to like tap into another demographics that we don't have overlap with? For example, we will be on certain chains that is pretty focused on RWA, for example, Plume, right? So they can allow us to tap into that specific group of investors who understand about RWA, who we don't need to educate too much about like what we do about tokenization or financialization there, because they're super blended. So we somehow can reduce part of our like education cost on that chain's users. And then why do we decide to go on Base and Arbitrum is these two, they're pretty strong like DeFi ecosystem, DeFi communities. Because our product can be integrated with all the DeFi protocols to allow different risk appetite to different people with different risk appetite to buy. For example, PT and YT. Like these can be super degen. You can loop it. Like for example, 10% base yield can easily go up to 30%, 20% base that with a little bit leverage. So that type of people we also want to get and tap into because we are a very strong believer of DeFi and blockchain that enables the DeFi economy to be built. So we want to like get on like Arbitrum and Base, these like more DeFi native chains. And then for the other more AI native chains like Sealgraphy, Story Protocol, the reason we go on them is they've gathered quite a unique group of users who is super like AI native. So they have nothing to invest into, right? We can be essentially the asset they can hold, get some yield, and use on the AI ecosystem. For example, we can be the de facto like AI synthetic dollar that can be used in that chain for transaction. At the same time, we have a unique advantage is in the future we can actually have like physical delivery, meaning when people buy these tokenized GPUs, they can actually ask for physical delivery of computation power. So now, like that could be more interesting thing that come up for with these AI chains there. So yeah, so to make it like to summarize, like why which when we decide which chain to go to, there's always an angle where we find. Number one is in terms of whether we can open up new user groups there. Second thing is can we have more like DeFi utilities on that chain? Third is can we like get some synergies with the AI companies that beyond just being at a U asset, that can we open up more connections to local like developers, AI companies, getting them the computation power they need is a mutual beneficial cases. So yeah, like the reason why we want to get on multiple chains is because of that. Even for example on Say, right? Say it's also a DeFi native chain. So it's also on the same reason why we're looking to deploy on the chains that why we go on. And to be honest, some of these chains are pretty like supportive when we decide to get on them. They can allow like they can help us to promote altogether, get to the right people, get the right teams, and build together with the ecosystem. So that's why we like to do chains that you mentioned earlier. These chains, why we build on them.
Yeah, it's very thoughtful. Seems like the approach really boils down to creating enough surface area to where you can attract a diverse user base to kind of see how the asset's utilized over time. So it makes a ton of sense. And on the
Correct.
topic of partnerships, Gaib isn't just really moving money, you're also moving a lot of operational data. With that in mind, what made Iris the right partner for storing compute supply chain data and DeFi user analytics?
Yeah. I mean, Iris, you guys doing a really interesting thing, like programmable data here. There's always been a long problem about like blockchain data being so static. It's not dynamic. It's not updated real time. So we definitely need like a cost efficient like data storage on chain to make some transparency data to be uploaded on chain. For example, some of these like deals data, the financing deals data, or even the GPU data, when we actually want to put it on chain, we will store it somewhere. For instance, we will be continuously monitoring the underlying GPU's usage and the location. So these data, we can make it on chain. So if we go on chain, we have to find somewhere to store it at a relatively cheaper cost. And the second thing is because a lot of data are off chain. So you have to take into account of the verifiability, meaning the data has to come from somewhere. It has to be verified, it has to be true. And I think Iris provide like a good use case, good function for verifying all these like off-chain data, auditing the data before you push it on-chain, because you have like it basically is like a short-term memory and long-term memory structure similar to the brain that you design. So that is pretty smart design there. So that's why like on this angle, a lot of these data we can potentially like leverage Iris architecture to build it out to allow more transparency, more data to live on chain at the same time, providing our end users the information they want to know and they want to hear.
Yeah, absolutely. It becomes a mutually beneficial structure, and we're incredibly excited to work with you and your team there. So, Tony, in this space, everyone loves talking about the future. It's a game of growth and prediction. So, with that in mind, if we were to sit down in 2027, roughly 2 years from now, what does success look like for Gaib?
It's a very good question. I hope to do like in 2 years, we can capture at least like 1 to 2% of the whole market share of like hardware. Because there will be a very significant amount of capital that can be on our protocol. Because if you look at how much Magnificent Seven they are investing into AI infrastructure these days, like they're throwing $300 billion worth of capital every year into AI infrastructure. And then the other like big giants all over the world, like Alibaba, they thrown like $50 billion in 3 years. So 1% of the whole market, like of like $1 trillion market would equate to at least $10 billion worth of value. Like that's already super huge. If you look at the landscape of all the DeFi protocols, all the crypto projects these days, and we are going to that direction. Right now, we have over $1 billion of worth of GPU assets in our pipeline that we can tokenize. We're definitely going that direction already, but we want to be more aggressive. We want to be the standard. When people think about GPU financing, think about GPU tokenization, they think of us. We are working very hard on that, and we're expanding our network as aggressively as possible globally to feel not only to help us to expand, but also help the underneath the new cloud, these new type of data centers, new type of cloud companies to grow. Because my vision is if we go to the future, there will be a lot more regionalized, localized cloud company to service the local AI needs. The traditional like AWS, GCP, Azure, the top three public cloud dominates the market that era, may be changed a little bit. Because even now, like if you look at Alibaba, they also source quite some local cloud resources if they want to venture into that specific country. So there will be a lot more fragmentation, a lot more like up and rising new challenges in the market, and we want to help that because it will bring down the cost for GPU compute, it bring down the cost for using models, and ultimately it's the consumer, you and I, that get benefited. And so we want to be in the revolution. We want to be like tapping into the market, get a bigger pie of the market share there, and also become the market standard. When we are ready, when the traditional capital are ready, we want them to come to us. So we will be functioning more like a platform. Anybody that wants to invest into this asset, come to us. Anybody that wants to underwrite, bring the deals of a cloud company onto a platform, we would welcome them to join us. So we want to be as open as possible, be the market standard, grow the market share in the next 2 years.
Effectively create a world where the space is much more competitive than it is right now. I think that's an awesome outlook. And bringing this conversation full circle, you've navigated both TradFi and crypto trenches. You've done so, I'll say, very successfully. What has the biggest mind shift been in that journey for you?
It's a very good question. As an investor, you have the breadth about where the market goes, but you sometimes you like the depth. Even when you are a specialist in a certain industry, let's say back in traditional finance days as a researcher, you might focus on a specific subsector, and even inside the subsector, you're focusing on 3 to 4 companies and studying them deeply inside, talk to management team every day to get the insight, to write a report for them, like how should I value this company, what money they should make. But you're still like a bystander. If you're not inside that industry, you will miss a lot of things. For example, as a founder, you have a lot more things, a lot more insights than a bystander there. Like we're inside the AI cloud business every day. We know how is the sentiment for people renting GPU is, how the price of GPUs like changes every day. And also we know like whether people are interested in these assets to be invested into. So it also teaches us one thing is just be a sponge, like absorb as much as you can. When you are in doing this, when I do this full time, right, I focus on getting deep to where it will grow like more deeply into this subsector, GPU finalization, getting the deals on. But sometimes you also need to see what are the opportunities that we venture into. For example, other than GPU assets, to really doing more assets when they're ready. For example, ASIC, the other computation assets, or the other hardware. So we also have to keep number one, open-minded. Second thing is to keep doing what we do. So just do the right thing. We have proven the market has a need for it. Then the next phase is to scale it. So yeah, that's something that I learned from transitioning from an investor to a founder is just get your hands dirty, be humble, and keep on hustling, keep on building. As the old saying goes, right? Keep building.
Yeah, 100%. You kind of front ran my next question. I'll ask it anyway because there might be some interesting takeaways. But for those building in the space, maybe at this intersection of TradFi and crypto, is there any additional advice that you want to offer builders that are doing so?
I think it's one, do the right thing, and number two is keep building. So if you are doing the right thing, meaning you have the market, like product market fit, you have the demand from the markets. Like if you keep on building on this, you would definitely work something out ultimately. So, but if you're not in the right direction, you still keep on like doing it, you might not end succeeding. So sometimes pivot may be needed. Sometimes like you have to twist the idea, then you can find a new direction. So be nimble, but be nimble, choose the right direction, and keep building. So that's what I learned. For example, in terms of when we actually launched our, right, so we all thought about doing like tokenized GPUs deal by deal basis first. We didn't think of AID. AID is actually the second step of our roadmap. But after talking to more people, talking to the market, getting the feedbacks, we think that maybe let's just get AIDs first, more like a set menu. It's easier for people to solve, easier for people to understand, lower like entry barriers, and then we did it. And it proves that like we started small. We started with first 5 million cap, see how it goes. And actually the market's feedback gave us was that, hey, you guys, that's something that we wanted. That's something that we're interested in. So right now, well, our next focus is we're doing the right thing. We should be keep building. Keep building means we should get it out, go to the exponential growth phase, like get it as widely spread as possible. So it's okay that, sometimes you pivot, sometimes you change a slight direction or twist, or even it's like the product launch schedule and just test it out first. Like try and error is always the ethos in starting up a company. There's no one pathway, like all the way so favorable, no hiccups, like all the way to success. Well, there might be some lucky guys, but I'm not one of them.
It's very humble. And I feel like within that response, the through line for success is really through humility, listening to your users, understanding that maybe that first iteration of the idea isn't always the best iteration. So I think that's really valuable. And as we start to wrap up, Connie, this has been an incredible conversation. I really appreciate all the nuance. Is there anything else you'd like to cover?
Anyone who's interested to like into AI yield, please follow Guy and stay tuned for our next like cab launches and also our actual product launches. So there are a lot more interesting things that we'll be doing in the future. As I mentioned earlier, like tokenizing these GPU assets and getting on chain is only first step. We want to be building the whole economy around that, and people can not only hold it but trade it, use it, and get exposure into the whole AI economy. When it grow, you grow. So now you have a chance to be part of that.
Amazing. Well, Coney, I really appreciate you coming on the show. Incredibly excited to continue to collaborate with your team and follow along with all of the success to come.
Thanks, Jake. My pleasure.